Yeah. Surprise, a little different than you're used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. All right, good afternoon. Apologies, I'm a couple of minutes late. Technical issues here, and I've just been running late all day today, actually, because I'm still working and everything. So, look, I do want to have a little conversation. Let me just bring this up so we know what we're talking about. Look, a lot of news about mortgages yesterday. The average 2-year fixed rate mortgage crossed 6%, which is going to be scary for a lot of people. Spoken about it on the podcast yesterday as well. So, we're going to have another meeting with the Bank of England. Well, the Bank of England is meeting tomorrow, and they're probably going to confirm a rate rise. So a lot of people are a little panicked at this point in time. I'm speaking to a lot of my friends who are in property as well, and they're like, it's something right now out there in the market. So what I want to do in this live is I just want to give you a few things to actually do, right? Practically. So please take some notes, ask questions, do whatever you need to do. But look, proactivity is really, really important right now. The last thing you should be doing is, sitting your thumbs, just trying to figure out what happens. And I'll try and bring as much of my own experience into this as much as possible to help you. I do have another video going live in about 56 minutes. That video is about investing. So if you do stick around to watch that, that will be a massive, massive help. But just before we get started with this, please do remember one of the best ways in which you can support this channel is by smashing the like button. It just means that the YouTube algorithm knows that you've actually enjoyed it. It was useful. People found it useful. And then what they do is they then recommend it to other people who may be in the same situation as you, who need to also hear this conversation. So that will be a massive help. And if you are not already subscribed, consider subscribing. We are trying to grow the channel. I'm not too concerned about the subscriber number, really, to be fair, but it's nice to have more people that are subscribed, because then the notifications come through to you in the first place. Right. Okay. I was on BBC Sussex probably about an hour ago talking about this, and that's really been the inspiration for me to jump on this live and do this with you guys. So if you are currently in a position where you're looking at the rates and you're a little panicked about the mortgage rates right now and what it's going to mean for your mortgage repayment, this is for you specifically. Now, just full disclosure, I've said this a number of times on the channel. My fixed rate comes to an end in October, right? I'm going to be coming off a 1.49% fixed rate. And I have been talking about this for months. I contemplated taking the early repayment charge, paying a little bit of a charge there. It was going to cost me about $2,500. I waited. Now, back when I was considering that, I think the rates were around about 3.5%. Yesterday, I managed to lock in at a 4.75% with Halifax. And this is going to be the first tip that I'm going to give you for this live session if you have your mortgage coming to an end this year. So in the next 6 months. Typically speaking, they will tell you that you can start shopping around for your mortgage or for a new deal at the 3-month mark. Okay, that isn't true. You can actually start shopping around 6 months in advance. So, in other words, we're in June right now. If your mortgage is coming out of its fixed rate in November, December, you can start shopping around now. Now, many people are saying, well, why would you do that? Because, well, everything might calm down. This is a bit of hysteria right now. Rates might continue to drop. Okay, that's completely fine, valid point. You lock it into a fixed rate right now. So yesterday I locked into a 4.75% fixed rate, which will come in October when my mortgage comes to an end. If between now and then mortgage rates do drop because the Bank of England don't rate hike rates, and mortgage rates tend to subside as well alongside that, I can still go for a cheaper rate in October. What I'm doing, though, is guarantee myself a rate right now. So if you are 6 months from your renewal date on your mortgage, you can start shopping around right now. Now, a little bit of a fun fact. The deal that I got with Halifax at 4.75%, I asked some of my mortgage friends to actually have a look on the market for me yesterday, and there were none at 4.75%. Most of them were over 5%. So within this tip, there's also another thing to consider. Speak to your existing mortgage provider. I've been with Halifax now for probably 8 years or something like that. So this may be a deal that they have for their existing customers, which is a good thing. So make sure you're speaking to your existing mortgage provider. What you can do is also get a second opinion and speak to a mortgage broker as well. That will give you a view of all of the market, including any existing deals with your existing mortgage provider. So just remember that 6 months, not 3 months. The second thing that you could do, and this may work out for you if you are not within that 6 month window, right? You may be having a mortgage that's going to mature in 2024. Now, what you could do, and you've got to take this with a little bit of a pinch of salt, is you could speak to your mortgage lender and ask about, I'm going to say two things specifically. One, taking a mortgage repayment holiday. Now, not everyone's going to be able to do this, but if you have kept up payments, as long as you don't have maybe help to buy or something like that on the actual mortgage, you might be able to take a mortgage repayment holiday. And that may give you a little bit of time just to kind of reorganize your finances and make sure that you're actually set up properly to ensure that you can just reset effectively. Not everyone's going to be able to do this, but it's worthwhile asking. The second thing that you might also be able to do is look at the possibility of whether or not you could go onto an interest-only mortgage for a short period of time. And I have to stress, a short period of time. Now, within this conversation, I'm also going to throw in the fact that you might be able to go part and part. So, in other words, if you're a full repayment mortgage right now, you might be able to have a conversation to say, can I go on to part interest only, part full repayment? If I'm honest, if I had to choose between the two, I would probably go part and part, purely because you're still paying down some of the capital that you have on your mortgage. Whereas if you went interest only, for the period that you choose to go interest only for, you're only paying them the interest. You're not paying down the capital. And so the side effect to the knock-on effect to that is that, well, you're probably adding on a little bit of time to your mortgage. Now, I have definitely had conversations with people over the last maybe 2 or 3 months where they have been in interest only mortgages. And I spoke to one person in particular, broke my heart. Lady is literally on the cusp of retiring, but she had 2 properties on interest only mortgages. She just didn't realize that she was an interest only mortgage. And the day comes and she's getting letters from the bank saying, you have an outstanding balance of X 100,000 to pay us. And she's like, oh my God, what do I do? So interest only will be a massive help if you are struggling. Look, my mortgage going from 1.49 to 4.75 is going to increase by about £210 roughly, 210, £220 a month. Not a lot of people are going to be able to sustain that, particularly when you start bringing in factors like, food has got more expensive, fuel has got more expensive, energy is still very, really expensive. This is going to eat up most of people's remaining disposable income, if they had any at all. Is going to push a lot of people into the red. So this interest only option will allow you to reduce your mortgage payments quite significantly, but you should take mortgage advice for this. Please just don't go and look at this willy-nilly and just go into it without understanding what the downsides are. The last thing you want is to get into a interest only mortgage. You become accustomed to the lower expenses. Your finances adjust to it, and then you find that you're on interest only for 2, 3, 4, 5 years. It doesn't do you any favors. You're only paying the interest. You're lining the bank's pocket, but it is an option. Half and half allows you to maybe reduce your mortgage payments, still by quite a significant amount, but you still have that peace of mind that you're paying back part of the capital. But again, speak to a mortgage provider, go and speak to a mortgage broker to see if that is a possible thing for you. There's been a lot of chat about overpayments. Now, this is probably the third tip that I'm going to give here. I'm certainly going to make a lump sum overpayment to my mortgage for sure, because I would rather borrow a smaller amount on a higher interest rate than a large amount on a high interest rate. From a disposable income point of view, it just drains me even further. So I'm going to make a lump sum payment onto my mortgage. Now, a lot of people think that you need to have lump sum cash to be able to do so. Yes, it's helpful if you have, but you can make overpayments on a monthly basis via your monthly payment to your provider. And about 2 weeks ago, I had Jinesh from Sprife app do a live with me. That app effectively is designed to help you realize that if I make a £10 overpayment per month, what does that translate to into the interest savings that you make on your mortgage over the term of your mortgage. So £10 here, £20 here and there on a monthly basis makes a huge difference. And I would encourage anyone to go and download that app and just have a little play around with the instruments that they have on there, because you'll be able to get a very clear idea of, look, even if it is 15 quid or 20 quid that you're able to overpay every single month, well, look, you may think that's a small amount, but it's chipping away the interest that you're going to be paying over the long term across your mortgage. I mean, it's astonishing to me to realize and to think that if you have a mortgage for 200k, over the course of your mortgage, you are literally paying about 200k's worth of interest on your mortgage over the term of your mortgage. It's mad when you think of it that way. So anything you can do to chip away at it, I think will be a really good thing. I don't have the QR code here, but the live was on, when was it? See if I can actually just find it really quickly for you. I can give you a date when we had that live. It was on a Sunday evening. It was on Sunday, June the 11th. And if you go and watch that video, there is a QR code for you to download the Sprive app. You'll get £5 towards your mortgage overpayments by scanning that QR code. And you can watch the video. Jinesh is a great guy, really ingenious solution. So perhaps go and have a look at that. But that is the live on this channel, which was on June the 11th. It is about, I can't remember how long it's for. I think it's probably about 45 minutes long. Lots of gems in there. Really lots of gems. So that's something you can have a look at. The last thing I'm going to leave you with, and this is something that, you know, came out in conversation with Fumi when we did the mortgage clinic a couple of weeks ago. Look, if you are in a position right now where maybe you're just really busy and you know that your mortgage is coming to an end and you've not yet looked at it, you should understand that you're going to go on to your lender's standard variable rate. And the standard variable rate for these companies are not cheap at all. It's no joke. I mean, I know I looked at my one yesterday. So if I did nothing on my mortgage, so again, my mortgage is 1.49% right now. In October, it's going to come off its 1.49%. And if I went on to the lender's standard variable rate, because I'm busy, I don't have time to look at it, I didn't negotiate a new deal, the Halifax standard variable rate as of yesterday was 7.99%. There are standard variable rates out there at 8.49. So this is the last tip that I'm going to give. Don't procrastinate and just think, well, hang on a second, I'll get round to it at some point. I'm way too busy. If you come off a fixed rate and go into a standard variable rate, you are going to see a significant jump in your mortgage payment. So try and get ahead of it now and just dedicate 10 minutes, 15 minutes, an hour, whatever time it takes you, dedicate it to try and get ahead of this right now. But hopefully these are some practical things that are going to help you. I know that there's a lot of doom and gloom, and I don't want to be the person who kind of feeds into the narrative of a doom and gloom, but I'm reading a lot at the moment about the possible implications of what this is. And I do think that we do need to have conversations where we are able to be honest with each other and say, look, this might be coming down the track. It looks pretty bad. How do we prepare? And opposed to what most people will say, I'll just ignore it, it'll be fine, and then think silver lining, when there should be things that you do to prepare yourself. So I try and make the content as useful and as practical as possible. And I try to be as real as possible as well. I don't want to feed into the hype, be it good or be it bad. I just want to kind of keep it in the middle, keep it level, and just be honest and have really good conversations with you guys so that you can take some of what I'm saying here, go do some further research, and hopefully make better decisions in your own, personal lives. And I said this on an IG reel a little bit earlier on. Look, me fixing for 2 years at 4.75 was what I feel is right for me. It may not be right for you. You may decide to go 5 years, 10 years. Whatever you decide, it's your decision to make. I've gone 2 years because now I've come round to the idea of actually trying to pay down the mortgage and be mortgage free in 2 years. My mindset has just shifted. And so that's where I am. But I hope that you found this useful. I really do appreciate all of you for being here. I know that there's some comments in the comment section. Let me see if I can get to these very quickly. Let me switch these over and see what you guys are saying. Which is saying, afternoon, how you doing? Daniel, hi, how you doing? Daniel's just saying here, my girlfriend and I had a conversation with our house deposit. She had the idea that we would we could move out next year. Unfortunately, I had to bring her back down to earth due to interest rates. Look, the flip side to this interest rate equation is property prices. If things get really, really bad, it will impact property prices, which means that depending on where you're buying, you'll probably see that house prices will fall. I mean, from August last year to now, house property prices, well, property prices are down. Property prices are down about 10%. So I would say just pay attention to your local market. Speak to local estate agents, see what's going on. Don't lose hope just yet. Keep your ear to the ground because you never know what's going to happen. Sebastian is saying here, hey, Pete, I haven't been able to catch your lives recently due to work. I love the book. Really useful tips, and I wish I'd been taught. Thank you very much, mate. Really, really, thank you very, very much. And for those of you who may be new to the channel, if you've not picked up my book is the one in the corner right here. So right here. It's called The Money Basics, How to Become Your Own Financial Hero. And you can scan this QR code right here to basically get it off Amazon. It is a physical book, it's an audio book, and it's also available as a Kindle as well, as a Kindle download. So maybe consider having a look at that. I share a lot of my own personal journey with it too. So I don't believe in preaching to people about finance from a high horse. I've made a ton of mistakes. And that's what I try to share on this channel, basically, to let people know that it's okay to make mistakes. And hopefully you don't have to make the mistakes that I have, because I explain a lot of the consequences of it and how to fix the habits that sit behind those mistakes in the book. So thank you for that, Sebastian. Appreciate it. Thank you very much. Jamie Shed is just saying great advice there. Daniel's saying here, to put it into perspective, the interest rates are so high, Sprive will have to update their calculator to adjust it higher than the current 7% scale slider. Yeah, and the guys, Janesh and the guys at Sprive will be looking at that on a day-to-day basis as well. What's the name at the top of the app? Have I missed something here? Bear me 1 second. Let me just scan back up here quickly. Name at the top of the app. Sprive. There we go. Carly, how you doing? Thanks for being here. Someone saying we're Berkshire based, so marketed already saturated for what we have saved, but keep an eye ear to the ground, as you say. That's the best thing you could basically do. Let me just scan and see. All right, here we go. Someone's just saying here, I got a mortgage agreement 4.5 months ago before the 5-year was over. Apparently it was from when we guessed I'd complete and I could apply 3 months early. Okay, that's good. If you're looking for, generally, if you come to the end of your fixed rate, they will typically say three months, but normally 6 months is where you can actually begin looking around. Do you think the market will go down further potentially next year? And would it therefore be a mistake to buy now? Or do you think it depends on individual circumstances? I fear negative equity. I think for that, you want to make sure that you've got a larger deposit as possible. There are people who bought properties during the COVID period where the government basically said, look, pay no stamp duty to get on the property ladder. And that was a way of them propping up the property market. If anyone back then chose a 2-year fixed rate and maybe had a 95% loan to value, so a 5% deposit going in, I would be really concerned for them right now, because it is possible they're teetering on negative equity, and they're going to be going from rates which were still 1-2% at that point to 5-6%. It's going to be a real shock to the system. I think the best thing for you to do here is really pay attention to that deposit. The larger deposit you can have to begin with, the better it's going to be, because there's going to be less risk on the table for the lender. They'll give you a better rate, and you're going to have more equity to play around with if the property market does crash. Will the market crash? We don't know. Again, pay attention to your local markets, pay attention to news, try and network within the property market or property people on Instagram, on YouTube here, just to kind of get a guess of what's going on and make a decision from there. That's the only thing that I could really say or recommend to do, really. But there we go. Right. Okay. There are lots of comments coming through. Someone's just saying here, £190,000 left, planning on putting 70,000 down in October, due renewal in November. Plan is to go on SVR and just pay £5,000 a month. Mate, dude, I would go check out that standard variable rate first, mate. You might want to go have a look at a tracker instead, or a discounted rate or something. Um, that for me, for me personally, that would be nuts. That would be crazy, crazy. The fact that you're making a lump sum payment is great. I mean, I'm probably going to make an overpayment of in the region of about 50 odd K to mine. Um, but I wouldn't go on to a standard variable rate. That's just me personally. It may work for you. I would definitely have a look at maybe a tracker rate or maybe a discounted rate. Look into those two. Speak to a mortgage advisor or speak to your provider. But if your standard variable rate is like 7%, 8%, God forbid, even 9% by the time you get round to that, you're gonna make the payments are gonna go nuts. It's 5 grand that you're giving to the bank in profit. Why would you do that? That's the way I think of it anyway. So yeah, speak to a mortgage advisor, mate. What do you think is a relatively good loan to value? Right. Okay. You're going to start accessing really good rates at about the 75% loan to value. I mean, at 80%, you'll get decent rates for sure, better than 90%, and definitely better than 85%. Loan to values tend to change at the in 5% intervals. So, your rate at 90 will be better than 95, right? But if you could get like an 80% loan to value or a 75% loan to value, that would be amazing because you're going to get really, really good rates. And I know that that is a massive, massive, massive job to do depending on where you want to buy. I mean, if it's in London, Jesus, like it's nuts. But if you can get 20, 25% deposit, trust me, over the long term, you're going to get a better rate. You'll pay less interest. The monthly payments are going to be a lot less as a result of the rate being cheaper. It's a better place to be if you're able to achieve that. I left my 2-year fixed rate run out. My advisor seriously suggested a tracker or porting, but we sold the house in a couple of weeks. Oh, that's good, mate. And look, a lot of people are selling at the moment, and I don't blame them. I've been trying to get someone on from Rightmove to talk about the rental market and what they're seeing in the rental market because people are saying that they're going to sell properties and go into rent. And I don't know, someone posted a message, I think it was yesterday, saying that rents in, I think it was Southeast London, were down 10% from this time last year. And I find that really hard to believe because from what I'm hearing, rents are rocketing because of the fact that mortgage rates have gone up and a lot of landlords are running their properties in negative right now. They're not, the rents aren't covering all of the cost of the mortgage and the bill. So um I was surprised at that. But look, whatever works for you, man. And this is the important thing as well, right? you know you've got to make a decision that's going to help you sleep best at night. At the end of the day, it doesn't matter what anybody says, doesn't matter what I say, doesn't matter what a mortgage advisor says. You've got to be able to sleep and rest easy with the decision that you make. That's the most important thing. And I think people need to bear that in mind. There was a follow up here from Ashley, actually. So he was saying it here, I thought I knew better 2 months while we processed the 5-year fixed rate, still on 7.6. Oh, these last 2 months have been steep. Mate, yeah, I'll be getting onto the provider, mate. And just literally, you want to put a rocket up their backsides, to be honest. You really, really do. Yeah, I mean, that's steep. It's really, really steep. Oh, thank you. I like to see new people. So thank you very much. I do appreciate you for being here. I do, again, try to make the channel as interactive. I like to have conversations. And that's really, really important. So that it's relatable and, I share and talk about what I'm doing and all that kind of stuff to make it real. And I think that's very, very important. But thank you for being here. Yeah, I'm thinking of bringing back the finance clinic. So I used to do live Q&As every Sunday at 8 p.m. It was every single week. It used to be on a Sunday at 8 o'clock. We'd be on for an hour and a half. I'd just take questions from people. I did one this past Sunday for the first time in a long, long time, rebranded as a finance clinic. So you can come along and ask me any questions. And I think that might be useful right now. I'm actually traveling this Sunday, so I won't be able to do one this Sunday. And I'm traveling back from where I'm going to this Sunday, the following Sunday. So there may be another finance clinic in about 3 weeks' time. So maybe tune into that. But once I know what's going to happen, I will schedule it. So if you hit the notification bell on the channel, you'll get notified when I schedule something like that, because it allows us to just do exactly this, conversate, and basically me answer questions and and try and help as much as I possibly can. Kevin here's just saying, my 2-year fixed rate mortgage is coming to an end in October. Any advice on what to do? Do I remortgage or leave it as it is? And should I act upon this now? Act upon this immediately, mate. Go speak to your provider, go speak to a mortgage advisor. You can get a rate locked in now. I've already explained this at the very, very top. You're in the same boat as me. My mortgage comes up in October. I literally yesterday managed to secure a 4.75% fixed rate for 2 years. And if rates drop by the time October runs round and there's a 4.5%, I can get a 4.5%. So act on it immediately, mate. Speak to your provider, speak to your mortgage broker. Yeah, so someone agrees with me here. Rents are only going up in London. Literally, it's mad. So I couldn't believe the comment. It might have been a typo, but there we go. Someone's saying, are first-time buyers picking the X rentals? I would imagine they are. I mean, depending on location, I'm sure that they are. But again, location dictates price, right? Sell price. So you have that challenge when it comes to deposits as well. Apparently, the comments and thoughts, Peter. Love at the community. Hopefully, dropping in a clinic chat next. Thank you, mate. Appreciate it. Right. Okay. So this is a little longer than I thought it was going to be. I thought I was going to just do like a 12-15 minute quick boom. Come on, here's some tips and stuff like that. But it's been great to actually have as many comments and questions as we have, certainly on a Tuesday evening as well. So thank you for that. Really do appreciate it. I will probably be again online tomorrow because the Bank of England is meeting tomorrow. So the question is, if we do see a bank rate rise tomorrow, have all of the mortgage increases that we've seen been done with the view that that was going to happen, and therefore have they been priced in? Or will we see the banks increase mortgage rates again? That's going to be the question to answer tomorrow. So once I kind of understanding of what the timings are for the meeting and what information we're going to have out, I will do another live session tomorrow afternoon just to discuss what we found out and maybe offer some views here. Like I said, I was on BBC Sound Advice in Sussex earlier this afternoon, and Danny basically said to me, like, what are they doing? Like, until now, all of the interest rate hikes have done nothing. This past month, they have. And I think they're trying to roll with momentum. They're trying to strike while the iron's hot. Inflation is still well above the forecast where they're targeted to be for Q2. So this next round of interest rate hikes, really, it needs to have an impact. It really needs to have an impact. Because if it doesn't, that's when it gets really scary. Like really, really scary. And again, I don't mean to scaremonger, but if we see another 1% interest rate rise over the next 2 months, 3 months, and inflation remains the same, or inflation goes up, that will tell them that inflation is entrenched. And that becomes a much, much bigger problem to address. And what they then have to do from that point onwards is just, it's not even worth thinking about. It's very, very unpalatable. So the hope is, if we see a 0.5% or 0.25% increase tomorrow, I wouldn't be surprised if it is a 0.5% increase, just to be aggressive and try and really push it down from 8.7 to 7.5, where they want it to be. If we see that tomorrow and nothing happens, it's going to be interesting. But hopefully they get this right. Hopefully they get it right. Fingers crossed, literally, for everyone. But yeah, we'll provide some commentary on that tomorrow and see what basically happens. But I appreciate you guys. Thank you so much. There is a video going to be live on this channel in about 29 minutes. It is about investing, a little bit of a polar opposite to what we're talking about right now. I know that many people, if you're worried about your mortgage, investing is probably the last thing you're thinking about right now. But for those of you who are thinking about investing as a way to, take advantage of the opportunity that a recession or a possible recession presents, then that video is going to give you some really good information about the type of companies that tend to do really, really well when we are in an environment where recessionary fears are a really big conversation point. And if interest rates continue to rise, the fear is it's going to throw the UK economy into a recession. So if you are putting money into the markets and you deem it as an opportunity, and there are two sides to this, right? opportunity, increase risk. I covered all of this in the video. You know, you need to understand what you're doing, where you're putting your money, and it's not a guaranteed surefire solution, but it's definitely going to give you some really good bases to make an informed decision. So that's going to be live in about 28 minutes. Hopefully you can go and watch that and go and support that video as well. But thank you so much, guys. I appreciate you. See you later.
Yeah. Surprise, a little different than you used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. We got the traders, got the picture with the Bentley in Dubai. Are you dripping in designer looking fly?